From the most basic point of view, the US government itself is bankrupt, terminally bankrupt. It can't dig itself out of the hole. In fact, it's digging the hole deeper. The official $31 trillion dollar deficit is being added to at the rate of a trillion and a half a year. So everybody knows, certainly sophisticated people know, that the dollar is a hot potato.
Doug Casey is an American writer and the founder and chairman of Stansberry Research. He is also a speculator who has always been vocal about bad government policies. In a recent interview with Danielle Cambone of Stansberry Research, Casey talks about the dollar's role in the international market and how its reign as a dominant currency may be gradually coming to an end. The backdrop of the discussion is the recent news report that Saudi Arabia is in talks with China to sell oil in exchange for the Chinese yuan, ending an agreement that has lasted for almost 50 years. In 1974, Saudi Arabia and the Nixon administration struck a deal to end a Saudi-led oil embargo against the United States. Since the agreement, which focused on several economic and security areas between the two countries, Saudi Arabia has sold its oil exclusively in US dollars. And major world powers are looking to break that hold. First, it was Russia and China opting to conduct their trade using the Chinese yuan. Now Saudi Arabia, and according to recent reports, India are also in talks with Russia to conduct oil trades using the Chinese yuan. A pattern is slowly forming, and it may cause a massive geopolitical shift. In his interview, Casey explains that the dollar's strength and dominance are partly due to its role in international trade. If countries no longer need the currency, then the unloading that would follow could very well crash the value of the currency. Before we get to Casey's part of the video, remember to smash the like button and drop your comments below. Everything you do helps us grow.
Well, all I can tell you is that the experts know nothing, including myself. And a major reason for that is that basically all we know is what we hear from government-approved sources and the mass media, which are basically minions of the government, and even the things that I hear and read. And I subscribe to several international newspapers in Hong Kong and London, and of course here in the US and others. You've got to take it all with a grain of salt, because in war, it's been said correctly that truth is the first casualty. So don't believe anything.
So on that note, let's start with the latest developments here. I mentioned Saudi Arabia, and my main question to you is the US dollar in danger here?
Yes, well, it's been in increasing danger for decades, but now it's gotten to a critical level. Look, from the most basic point of view, the US government itself is bankrupt, terminally bankrupt. It can't dig itself out of the hole. In fact, it's digging the hole deeper. The official $31 trillion dollar deficit is being added to at the rate of a trillion and a half a year. So everybody knows, certainly sophisticated people know, that the dollar is a hot potato. The main thing that's holding the dollar up is the fact that its major commodities, oil, which is the world's largest traded commodity, are priced in dollars. If the Saudis and other countries start accepting the yuan instead of the dollar, then what do people need dollars for? This 20 trillion, nobody knows for sure, but that's a good estimate, US dollars outside the US. Right. And if people don't need them to buy commodities, well, they don't need them for anything. And they're going to start unloading them. So yeah, this is a really dangerous situation. And it's not just the Saudis, it's the Nigerians, who are major African oil exporters, are doing the same thing with the Chinese. The Nigerians, the Saudis, don't buy anything from the US, but they buy lots of stuff from the Chinese. So it's perfectly logical.
So if the US dollar's role and dominance as reserve currency is coming to an end, I mean, what replaces it?
Well, that is the $64 question. I think what's going to happen is that we're going to go back to gold. Look, even the Chinese and the Russians, who are closer now than ever, do most of their trading, I understand, with US dollars, which is crazy. They have to clear those dollars through New York, the homeland of their enemy. You don't use the enemy's currency, for God's sake, or the adversary's currency, if you wish. It's best that they use a neutral currency, one that can't be inflated out of existence, one that can't be closed down at the discretion of some half-crazy pals in Washington, D.C. I mean, Russia's had all of its dollar accounts confiscated or put on ice, as it were. So any country realizes it could happen to them. So the U.S. is shooting itself in the foot by trying to punish the Russians.
If the dollar ceases to be the world's dominant currency in terms of pricing, payments, and reserves, then what currency or commodity assumes the role? According to Casey, gold will be the dollar's replacement. He explains that gold becoming the dominant means of payments and reserves for governments will look like the system that was in place during the 19th century. Casey explains further that the commodity will help remove governments from currencies and strengthen weaker currencies.
You might recall that in the 19th century, which was an excellent period of time in world history, there were fewer wars, there was more progress, currencies were sound, governments were tiny. The franc, the mark, the lira, the dollar, these were just names for specific amounts of gold. I think it'll go back to that. Listen, you really don't want government involved in currencies. I mean, gold takes governments out of currencies. You don't have to trust a government if you use gold. So yes, as strange as it sounds, I think the world is going to go back to gold because it's the only, I've said this so many times, but it's worth repeating. It's the only financial asset that's not simultaneously somebody else's liability. And all the world's governments, especially that of the US, are bankrupt. So who wants their liability?
Would there be enough gold to support such a system?
Yes, it just depends on the price of gold. How much gold is there in the world? Well, it's uncertain, but say about 6 billion ounces. And if we do some multiplication, divide the amount of ounces that the US Treasury owns, for instance, which is supposed to be 265 million. If we divide that into the number of dollars outside the US, we come up with a very high price. Divide 265 million into 20 trillion, divide it into the amount of the US debt, if the debt was going to be paid back with the US gold reserves, a huge high number again. That's on the one hand, Danielle, but on the other hand, and I've been long gold since 1971 when I bought my first gold coin. A quarter ounce of gold will buy you an excellent meal in the best restaurant in New York. A quarter ounce of gold will buy you an excellent suit. Not that anybody wears suits anymore. Gold is reasonably priced right now. Let me put it that way, relative to other commodities, relative to stuff in general. It's not cheap. It used to be cheap. It's not cheap anymore. But I think you should go a lot higher because there's going to be a panic into gold. Remember, only financial asset that's not somebody else's liability. There's not going to be a panic into lead or a panic into cadmium or copper. Well, there might be for other reasons, but not for money. Yeah, I think it's going higher.
Casey also talks about inflation, Bitcoin, and the danger of holding weak fiat currencies. He explains that Bitcoin meets all the attributes of money because it is durable, divisible, convenient, and consistent. As such, it qualifies as a suitable replacement for fiat currencies that have mostly been inflated away.
Well, look, you should be buying gold for savings and for insurance and for prudence. At these prices, I don't consider it a great speculation. It was a great speculation back in the year 2000 when it was selling for $250 an ounce, when incidentally, it was cheaper then than it was in 1971 in constant dollars. But now it's just kind of reasonably priced. So continue buying gold, but buy it for savings. And you don't really want savings in a bank because the dollars are being inflated out of existence. You might wind up bailing in the bank yourself, like happened in Cyprus. So yeah, your serious savings should actually be in gold. Well,
So-
look, the actual rate of inflation is about 15%. Forget about the government's phony figure of 7.8% or whatever they say. The US government's figures are only marginally more reliable than those of the Argentine government. So don't trust them. A real inflation, the dollar's losing value at around 15% per year. I think it's going to 20% and higher. But interest rates, banks will give you what, 0, 1, 2%. So no, there's something seriously wrong. I mean, this is why the world's financial system is teetering on a knife's edge.
Doug, why, would you not think that the next currency, instead of gold, wouldn't it be some sort of digital currency?
There's no conflict between the two things. Gold can be represented in a digital way. In other words, gold held in deposit, and you trade hundredths of a gram of gold on your smartphone. So it can be very good. The important thing is that the currency that you use is backed by something. It's something real. And of course, this comes to the question of, well, what about Bitcoin? Is Bitcoin real? And as a money, Bitcoin suits most of the characteristics, or actually all of them, of good. It's durable, it's divisible, it's convenient, it's consistent. And I always ask myself, well, what's the value proposition in Bitcoin? When I get holding the bag just with a digit on my smartphone, if I own Bitcoin, and then it occurred to me that 75% of the people in the world, if they save anything, they're going to be saving it with worthless currencies like dirhams and kwaches and pesos. So the value proposition with Bitcoin is that you don't have to, you have a transfer mechanism where if you're in Zambia, you can get your money out of Zambia anywhere you want instantaneously. But if you have Zambian kwaches, you're stuck, basically. So that's the value of Bitcoin. It's a transfer mechanism.
There is no doubt that we are currently undergoing a massive geopolitical shift. At the end of it, the world's superpowers will make new alliances and break existing ones. The shift will also determine what the future of the US dollar will look like. But one thing that is already certain is that its dominance will not last forever. To all our viewers and subscribers, these are critical times for economies in all categories of investors and individuals. So ensure you stay savvy and make savvy decisions for yourself and your future by investing wisely. Also, remember to smash the like buttons and subscribe to the channel. Thanks for watching.